Okay, so I'm going to talk about this question here. You say there are quite a few green soldiers. From what I've been learning, they indicate a reversal of the current downtrend and theoretically should push an uptrend. With SWE, they signaled a short reversal, but after each one, the new low is as low as the previous downtrend. So it's a good observation. And what you've just observed is why, if you find one interesting thing about the market, don't fall in love with it because it's way more complicated than just one pattern. So if you wanted to include your three white soldiers observation in a daily call, then just add, you know, I don't know if this is a monthly chart, so just add bigger picture pattern and then just write three white soldiers. Now, how I write the three white soldiers is if we go to this other, hopefully you can see this, how to identify this. See how this is just a V pattern, sideways, dip, go, V, sideways, dip, go, right? So going back to that, I would have to go to a sweet chart. Right here is a better one. So this one was a V, you're calling it three white soldiers. Like you look how more complicated. It's more than three, but you could see how, you know, I'm all for terminology that helps you in particular. For me, I don't, even though I'm fascinated with some of these more esoteric old school Japanese candlestick names, if they don't help me, I don't call it that. Like I don't really like saying things that are more complicated. I'll say selling and buying tails. And the bigger they are, the stronger the weight on the daily because implicit in the language is what to do. And when you're in fight or flight, sometimes it's easier. But anyway, that's just what I would say is like you have to stack a lot of different things and not just one thing. This one was V sideways dip go, V sideways dip go. But then when you have the inverse, right? Here we have a selling tail or what they would call an inverse dragonfly doji or something like that. Now you have to think how many leg counts up. Now we're going to reverse down. So the whole idea of three white soldiers pattern now, this pattern, if you just isolated that, you would fall in love with that pattern rather than thinking, wow, this pattern is smaller than this downtrend. So it's this downtrend that is the dominant larger time frame bias. As we pull up into this fib ratio, because this was a strong climax reversal, this 100% bounce breakout pattern, which if I drew a box around, it already went more than 100%, and now it comes into this bigger pattern. So when you have a bigger picture pattern versus another bigger picture pattern, bet you're on the higher weight on the larger visual pattern. Because after this, really, the V this V recovery, right? It's still dealing with the fact that we're still in this potential. You should be neutral when it comes up here. This is the mistake I made with Bitcoin the other day. Is that when it had the bounce breakout, let's say in Bitcoin here, that doesn't mean that I'm assuming let's just pretend this is a daily chart. I guess this is not. This is an hourly chart. But I was actually talking. I was actually looking at this chart as if it was a daily because that's what you should be looking at anyway. But the idea is that these are fractals, so they can't appear on all time frames. So what you call three white soldiers, I might call because if it has 6 or 7 leg counts down, and now it hits a major support zone where the bigger picture can switch up. Then if I see fast V's, then it could be a V recovery pattern, which then when it hits the V on the neck, it goes sideways, like you dip a little, and then it can go. And it's very V sideways dip go is a very simple, right? Implicit in the language is what to do. If you make if I have to remember three white soldiers, I might forget it. You know what I mean? It's not something that's in my vocabulary, but if it works for you, great, because it's just the same thing we're talking about. So, but remember, it's all contextual. Other things can outweigh it. A V sideways or a three white soldiers is more important at the beginning of a downtrend. But really, if this is the start of a new downtrend, one leg down, two leg down, now three leg down, we could start talking about something. And keep in mind, I'm looking at this chart, which I assume is like an hourly chart or something, and I'm pretending just for this example that it's a daily chart because I want to talk about the higher time frames and how to use this on a daily call rather than trying to look for something. I would definitely not use a three white soldiers on this 5:45 to 6:30 to 6. Maybe this might be a 15-minute chart. So anyway, just to clarify. So yeah, I'm all for that. If it helps you on the daily, it's all contextual. There's other things that can outweigh it, like the bearish leg count down. You have to think like, okay, now the larger time frame is bearish because we reversed. Now bears are going to dominate. That's when you can start going short. right? Most people want to short at the bottom of like that zone today at Bitcoin when I went long because they've been looking at the last 4 days and think it's going to break down, not thinking, well, maybe it'll reverse here. So I hope that helped.